Thanks for tuning in to India Market Close and pull up the markets on what has arguably turned out to be a reasonably strong day. We are maybe not at the highest point of the day, but stable above this 22,450 odd mark, in or around those levels. We are certainly off from the highs of the day, but that's not to be worried about. And one of the reasons could be that IT's kind of scaled back a little bit from the levels that it was trading at. So 0.5% up now for IT. When we started off, it was about 0.8%, courtesy what Infosys was doing and some others were doing. Banks holding fort, I would say, from and in or around the levels that they started off with. And more importantly, the small cap end of the market should come up on your screen, because that is where the real crux of the matter is. 2.6% higher. Mid caps and small caps are back with a bang. The market breadth should be positive. It was very high at the start of the trading day. It's largely stayed stable throughout the trading day. That is some solid market breadth in the session today. Bring up the heat map for the Nifty and show you what's moving and what's not. A lot more red than what was on the index, by the way. So the likes of Titan down 1.7%, Aisha down 1.6%. Some of the other FMCG names like Nestle as well as Tata Consumer have come under a bit of a stick. So that is the end of the market, which is pulled off. But on the flip side, metals are roaring. The PMI data and the estimates that have come out, whether private survey or the official Chinese data, both have looked strong, as a result of which this 5% uptick that we've seen for some of the metal names. Adani Port, on the higher volumes that it has handled, is up about 2.5% as well. And some of the economy-facing stocks, Coal India, NTPC, Ultratech, Adani Enterprises, L&T, that bucket is doing really well for itself. So no surprise that we've done well yet again on the first day, even if we are off from the highs of the day. And that the broader end of the spectrum is just doing exceptionally well in trade. So lots more to talk about at that mid cap and the small cap and Tamanna, even though the large caps too have their share of newsmakers today.
The small cap and the mid cap definitely are, the stars of the day, so to speak. I don't know. I think it is a bit of a positive surprise that you've sustained momentum from the kind of close you saw last week, and all things considered, you've had a great boost to the day. Look at that small cap index up about 2.5%. In fact, let's just pull up sectoral indices as well before I go into specific stocks to give you an idea of what's working. And Niraj talked about the small caps and mid caps roaring. Look at the reality index up 4% today. Media is doing well. Metals, of course, are shining bright. Pharma, pretty much everything, even in FMCG and auto, are very mildly in the red, if at all. Now, what's really boosting reality, among other things, is definitely Prestige. So let me pull that up as one of the key stocks on my radar this afternoon in trade, and talk about what Prestige is doing. Look at that, about 8% up. And this news actually broke pre-market that they have tied up with a couple of agencies. It's a landmark deal with ADIA, that's the Abu Dhabi Authority, as well as Kotak AI for about 2,000 crores. But that's not all. They're going to build up to 18,000 crores worth of infrastructure and property and buildings, etc., over the next several years in 4 cities. So you've had Prestige run up in that sense. PNB Housing Finance is another one. Definitely, a lot of contenders today for us for stock of the day, to be honest. And Prestige and PNB Housing Finance on top of that list. So they've had credit rating agencies upgrading them, at least their credit, but also brokerages upping the target price, which is why you've seen PNB Housing hitting lifetime highs. That stock absolutely flying. Torrent Power was another one that we've talked about this morning. So you're seeing order flows once again getting rewarded in that sense. It's a hybrid project. They're doing a 150 megawatt project, and it's solar and wind. 5% up on the stock. It's come off a bit from the day's highest point, but nevertheless, that stock doing well. Niraj spoke about Adani Ports. They've hit record highs on the highest monthly cargo volumes that they've ever done. But it's not just Adani Ports. Adani Group stocks today have been having a very, very good day at the markets. And of course, all the standard disclosures with that. But Adani Group stocks have been in focus undoubtedly. Aisha is... Again, business updates have not been great. Their March exports are about down 23%. And you saw Tata Motors numbers coming out, and we'll focus a bit on auto sales and what that means. But these are some of the key movers and shakers, I would say, in the markets today. But if I had to sum it up, Niraj, the day in terms of news belongs to autos, not too positive, but metals very, very positive.
And oh yes, and in fact, let's try and take forward that particular thing with Hemen Kapadia of KR Choksey Stocks and Securities. He joins us right now on the show. Hemen, great having you as always. Thanks for taking the time out. Let's start off with whether this move today on the index enthuses you to take any further trades for the April series on the Nifty, Nifty Bank, or the Nifty Metal Index.
A very good afternoon to Niraj. Thank you for having me on the show. It's always a pleasure. Frankly speaking, the dollar index is looking good. Crude Brent is going to cross 87 and go to 90, 95. Those are the things spoiling the move. So frankly speaking, gold is on a tear and silver is on the verge of a breakout. So something will have to give. But like you said, the Nifty Metal Index has given a breakout. In fact, on last trading session of the last week, you had the auto index and you had the capital goods index, which had posted a fresh all-time high. And today, like you said, Niraj, is the metal index. So frankly speaking, it's a breakout. So a clear breakout because we've been consolidating over here for almost 4 months, Niraj. And now we've poked our heads above it on the first day of the new settlement, new financial year, new month, new week. So it looks good. Now, having said that, we've gone from 7550 to 8548 in a matter of 11 trading sessions. Maybe there could be a small cool off, but if I look at it positionally, Tata Steel, Hindustan, Copper, JSPL, they all still look good. So I would say that yes, it's a buy, but if this is so exciting on the first day of the week, I'd wait for some sanity to prevail. I believe that 22,526 is the all-time high as far as the Nifty is concerned. And we've tested that 4 times in the last 2 weeks, 2.5 weeks, 3 weeks. So we haven't been able to take that out. I believe we will. So I believe a small consolidation, maybe a day or 2, or maybe even 3-4 hours. And when then it takes out 22,526, I believe it will. The VIX is down to 12 from 15 gradually over a period of time. That is good for bulls. So once we take out 22,556, that's on the anvil. We are heading to 22,800. So coming back to the main question, yes, on a decline, I would at this point no, because I feel a minor correction is possible on the Nifty. After that, about 22,526 is a clear buy, and Bank Nifty also. But as of now, I think the Nifty looks better as far as the Bank Nifty is concerned. But
right,
the Bank Nifty has done nothing for the past 4 months. If and when it breaks out, we are taking out 50,000, Niraj.
Okay. Hemen, in light of this, what are the specific stocks that you're recommending for the day?
Okay. Frankly speaking, a lot of stocks. I think some of the cement stocks are oversold. So that is where one could do something. And the entire railway pack, we spoke about it some time back, Niraj. So whether it's the IRCON or the RailTel or even something like an NHPC, and frankly speaking, you have Adani Power on circuit, which is great. I believe it is breaking out from here. Adani Port is almost at an all-time high. Adani Enterprises is one which has disappointed. About 3350, it'll catch up on lost time. So I think the entire Adani pack looks good. Railway stocks look good. PSUs look good. And like I said, metals, yes. Jindal Steel and Power, Tata Steel, maybe even a sale. Sale keeps on coming in band, so one would be slightly reticent recommending it. So it's all over the place. Mid cap, small caps have started recovering. So I guess it looks hunky dory as of now. Yeah.
Hemen, you're sounding very positive. Your tone never changes. So it's not like you're jubilant, but I'm listening very closely to what you're saying, and this is the most positive you've sounded in the last several weeks. I don't know if I'm wrong in seeing that or gleaning that from what you're saying. Are you feeling as positive about a Prestige or any of the real estate players?
Well, frankly speaking, yes, Tamanna, you're absolutely right, bang on, because we've been the mid cap, small cap fell off a cliff. Okay. they don't impact the main line, but mark-to-market calls, loan against shares, people book the mainline stocks to manage the losses in the mid cap. So, and that punctured the market sentiment badly. So one was not very sure whether the mid cap will go up or the mainline stocks will come down. But the Nifty showed amazing resilience, frankly speaking, Tamanna. So I believe that that is a positive sign. And if on bad times certain levels have held rather comfortably, and most of the mainline stocks, whether it's Reliance or the Adani Group, or many of them have shown a lot of technical resilience. So I have a feeling that the storm has passed, and we are set to we are heading into fair weather. So yes, I am positive. I would be, and like I said, the market. Basically the market breadth improves. The VIX is down, and you saw decent rollover in many of the stocks. Delivery markings are good. So everything seems to suggest that the correction has ended or is ending. And Nifty is on the verge of a fresh breakout, which will take it to 22,800, 23,300. And at the risk of sounding overly optimistic, before the elections or before the results, not before the elections, somewhere in May to closer to 24. Tamanna.
All right, specific to auto, let's talk about some of the auto players, and their numbers are coming in. We'll talk about that with Hemen in a bit. But we started the question with Prestige, and that is our stock of the day, Prestige Estates. It's up about 8%. Yeah, nearly 8% there as the company enters into a deal with Abu Dhabi Investment Authority and Kotak AIF. That deal is for about 2,000 odd crores, but the plans are much, much larger. Anushi joins us with more details.
As you mentioned, Prestige Estates has been the focus in today's trading session. Now, this is on the back of the news of it signing a deal with ADIA, which is Abu Dhabi Investment Authority, and Kotak AIF for a consideration of up to 2,001 crore. Now, this entails developing greenfield projects with a culminating GDV, that is gross development value of about 18,000 crore across 4 cities, which is Bangalore, Mumbai, Goa, and NCR region. Now, over here, the focus remains in these 4 cities, which is in line with the company's expansion plans. Also, if you look at the company which predominantly has about a southern focus, is now shifting its gears to other cities, the most recent being the Delhi NCR region. Now, even if you look at the past announcement for the company, it also acquired a land parcel of about 62.5 acres in the NCR region, which has for a consideration of up to 468 crore, which again has a GDV potential of up to 10,000 crore, and is expected to launch in the next 2 quarters. So that remains on the focus for the company. Even if you have to look at the company's overall 9-month financial performance also, let's take some of the key triggers, which is its pre-sales collections that has seen up to 81% and 20% of growth respectively in the 9-month FY24 period. Onto the stock performance of the company has seen about a 195%. That is almost about a 2 times returns in this 1-year period itself. While if you have to look at the analyst recommendation for the company, about 15 have a buy rating, while 3 have a hold and 1 have a sell rating on the Prestige Estates. So this is all that has been brewing for the company in today's session, if you have to look at, and the focus continues to remain on how it grows across the different regions going forward.
Yeah, focus back on autos now, and as I mentioned before we went across to Anushi, the Maruti numbers are out. They have recorded highest ever annual domestic sales, I'm talking about Maruti here, of 17.93 lakh units in FY24. Remember, this is the market leader who seems to have had a pretty decent year. It's recorded its highest ever annual exports of 2.83 lakh units as well. Before that, you've seen domestic sales up 15% year on year. Total sales, though, were up 10% year on year. Exports were down 14% year on year, even though the annual exports seem to be decent in terms of number of units, but revenues have come down. All right, let me go across to Hemen on Maruti and others in this pack. Hemen, anything that you like over here? Has been bad for tractors, but would two-wheelers be your preference?
Oh, Tamanna, Uh, Two-wheelers, yes and no, because if the auto index makes a new high before the rest of the market, I guess everything looks hunky-dory. But Maruti has gone up very sharply. So even like you said, two-wheelers is not a bad idea. Tractors haven't done well, but if I take a slightly longer term point of view, Tamanna, I think Escorts looks very interesting. It hasn't done much, less to lose, and I think it has a propensity to surprise on the upside. Mahindra is supplying by. It was doing well, is doing well. Bajaj Auto has gone through the roof, but Maruti and all, I'd be more comfortable if there was a small cool off coming in. That's why I'm trying to take a slightly contra call on something like a Escorts, which hasn't done much, Tamanna, and it's been down for 6 months in a row. So if I were to put my money, I would say buy Escorts Kubota. Looks good.
Okay. Well, other stocks that are buzzing in trade because of some approvals that have come in. There are some price hikes as well. Mihika joins in with some of the other key focus stocks today, more so at the small cap end. Mihika.
Yes. So up first we have KPI Green Energy. It hit an upper circuit of 5%. Now it's multiple news flows. One is that it's received CEIG approval, which is required for any electrical installation. One is for 10 megawatts of solar power projects under the independent power producer segment, means that the company will be designing and building and operating on its own. And then it's also received an aggregate of 54.74 megawatts of solar power projects, under which 6.59 megawatts are under the independent producer segment, while 48.15 is under the CPP, which is the captive power producer, where the company builds and operates for another individual customer. Additionally, its subsidiary Sundrops Energy has also won an order of 2.6 megawatt power solar project, and the order win is again under the captive power producer segment. Then we have EIH. It reached an intraday high of 7.7% as the company's board approved the construction of an Oberoi luxury resort, which will be located in South Goa on a 52-acre site. Now, the resort will have luxury 90 rooms, and the investment required for the same is at 421 crores, which would be funded by internal accruals as well as debt. And the resort will be operational from October 1st of 2027. And lastly, we have MOIL, which also reached an intraday high of 7.7%. Now, it's hiked prices for their ferro-grade manganese ore in the range of 3 to 6% depending on the grade, and have also hiked the fine and chemical grades by 3%, and the hike prices for electrolytic manganese dioxide by 2,000 PMT rupees, and this will be valid for only April, and all the price hikes were effective from April 1st. What the price hikes do mean for the company is higher revenues.
Okay. Mihika, thanks for that. Well, a lot of stocks flying around as we spoke about. Let's take a break though. And stick around. We'll delve deeper into today's market movement, even try and get you a global perspective on the other side. Stay tuned. back with India market close, and the broader end of the spectrum is doing really well for itself, so keep that in mind. But as we said, we'll give you some global opinion too. I spoke to Robert Sockin of Citi Research on his outlook on global growth with the emphasis on what's happening in US and Europe, and his view on what India GDP is looking like. Listen into this conversation.
Going into this year, we were expecting a pretty substantial slowdown in the global economy. The reasons for that are interest rates still remain high, and we see a lot of lagged effects of that in the system. Fiscal policies likely be less supportive than last year. The momentum within services sectors that we saw power growth last year, we think is fading, and the manufacturing sector was likely to remain soft. But now that being said, what we found is that even though we're still holding on to that view that growth is likely to slow, we've been marking up our global forecast over the last few months. The US has been holding up better than expected, as you noted. We marked up the euro area over the last 2 months, still looking for soft growth there, but better than we had expected a few months ago. And then if you look at the range of emerging markets, there's a lot of positive news there as well. We just marked up our growth forecast for China from 4.6% to 5%. Korea, a lot of other East Asian economies are showing strong momentum as well. And India closed last year very strongly, and we're looking for a solid year of growth in India for 2024. So even though all those reasons lead us to believe that growth is likely to slow, I have to admit that over the last few months, we've been surprised to the upside, as Q1 data have generally come in better than we've expected.
Would this therefore lead to a slightly higher inflation expectation than otherwise believed? And could therefore the global asset uptake party be disrupted by slower and lower, or both, action from the Fed or the other global central banks on interest rates?
Absolutely. And this is the key question, because as you said, growth has been surprising to the upside. That might also mean that inflation surprises to the upside. And we've seen a fairly mixed inflation picture at the beginning of the year. Now, there's a lot of seasonal volatility issues to deal with in the data, but in general, you're still seeing fairly high services inflation in most major economies around the world. And that's really the key, is can you get services inflation to come down without a bigger slowdown in growth? If you can't, and the history would say it'd be very difficult, then, as you said, this resilience in growth may mean resilience in labor markets and services inflation. And that in turn would probably mean a slower pace of easing from major central banks. Now, that doesn't mean that you can't, this time couldn't be different, and you could get inflation coming down with growth being resilient. We're seeing a lot of improvement on the supply side of the economy. As supply chain pressures have unwound, labor markets are healing. So you still may be able to get that services inflation down without a big cost of growth. But I think that's the big question mark for markets and central banks. And if you're in that world where growth is resilient, but inflation is also coming down slower, that means you're going to get less cuts out of the Fed this year. And that means you're going to get less cuts out of other central banks as well.
So what does that mean, Robert? I'm very inclined to understand from you. What does all of this mean for flows? Hitherto, I've been given a barrage of opinion that unless China growth picks up, flows into EMs will not pick up as well. Now, contrast that with the fact that China growth is picking up, but if the world growth is picking up and if inflation is higher and rates cuts are slower, that may have an impact on flows as well into emerging markets. So how do these two juxtapose in terms of what happens to asset classes by virtue of flows as well as natural valuations because of growth?
Yeah, it's a great question. And I would say, to your second point about natural valuations, this would be a broadly positive story in general if the global economy was able to weather the amount of shocks that it's seen and continue to perform at a strong pace. So I think, that's first and foremost would be good for asset classes more broadly, and risk as the global economy can continue to perform at the solid pace we saw last year. Now, to your point about EM versus DM flows, I think it raises a really critical issue, which is, you've seen emerging markets in this cycle. They hiked a lot earlier, their central banks, and they started to cut earlier as well in some of them, and we expect more to follow. But now you're getting to a point in those easing cycles where it really depends on what the Federal Reserve and other major DM central banks are doing in terms of the amount of easing and the speed of easing that those central banks are able to do. So, if we're in a world that we think where growth slows and the Fed starts cutting around June and continues to cut from that pace, I think that emerging markets can continue to ease policy, and you could still see a fair amount of flows into emerging markets. But it's this nexus of when do DM central banks move and what does that mean for EM that comes down to the extent of these flows and how fast those EM central banks are able to move. So I think it really comes back to, as you were saying, what happens with the inflation picture and how fast are central banks able to ease.
My final question is on India. I heard you say that India, on the base of a very strong growth done last year, you're still penciling in strong growth. How resilient to your mind is the EM and the India economy looking? Because Korea has tailwinds because of the whole semiconductor manufacturing and otherwise.
Yes.
China, I've just heard you up this. India is not coming off a low base. So what's your sense about growth in India and whether it can... earlier it was the beacon in a world which was not growing strongly. Can it still lead the growth where growth worldwide is coming back?
Yeah, I think with India, we're looking for growth for this calendar year, somewhere in the mid 6% range, around 6.5%, very solid performance, a little bit of a slowdown from last year, but still very strong. And I think, as you said, what is the tailwind for that economy? As you mentioned, Korea has a rebound in semiconductor demand, but more broadly, I think something India is benefiting from, and you're seeing this in other East Asian and Latin American economies as well, is you are seeing a shift in global production away from China at the margin and to other economies in the world. I think India is a big beneficiary of that and will be going forward. I think other countries in East Asia and Latin America are as well. So I think that's something that's helping now and is going to be a powerful tailwind for India going forward. Then more broadly, there are other factors that we could point to that maybe argue there's some upside for India growth. Right now, as I said, we think the global manufacturing cycle is likely to stay soft for at least a while longer. But there have been some good green shoots where you've seen the manufacturing PMIs moving up around the world. So maybe if the global economy recovers more strongly, that would have a lot of export benefit to India. So I think there are a lot of benefits to India this year and next year, and some potential upside even if the global economy recovers more strongly.
And that would be music to the ears for sure. Upsides if the global economy recovers. So there are, while there may not be rate cuts, there are some positives out of a global economic recovery as well. As we speak, the markets are doing well for themselves, but off the highs of the day, just about 0.45% higher. We dissect the last half an hour of trade with some derivative data, some key stocks to monitor today, some BTST ideas, and get a fundamental guest as well. All of that happening on the other side of this very quick break. Stay tuned.
Welcome back. Markets in completely, holding on to their turf. Nifty, though, off its day's highs, about 22,460. Remember, it touched 22,500 and receded. But business updates have started coming in from NMDC. Iron ore sales have been good year on year. Q4 has been a bit tepid, but that stock definitely up. This coming in from Informist right now, 5.5% there. But a lot more happening on the derivative side of things. Agam is standing by to break it all down. Agam.
Right. Well, we briefly hit the life high on the Nifty today. And while we've come off the mark, we're seeing the Nifty maintain the gains. And along with that, well, there has been a lot of traction towards a decline in open interest as far as the Nifty futures are concerned. And once again, where we are seeing a little bit of a resistance when it comes to trades being taken forward into the next, well, perhaps a couple of weeks. That said, when it comes to the Bank Nifty as well, the picture isn't very different. In fact, this is where we are seeing a very sharp knock of around 40% in terms of its open interest. So, and even as the index continues to rise by around 0.9% and advances, so there's a lot of shorts, older shorts being covered here as well. Well, moving on to the options market, at the moment, considering we have seen the markets move higher, which also means that we've seen a little bit more writing around puts. But in terms of your overall open interest distribution, let's pull that up. And we're still looking at a 500-point range. Of course, the Nifty is going to defend the 22,000 mark on the lower end, and on the higher end, we could see just a tad bit of resistance now starting to build around 22,600 and 22,700. So keep an eye on that one. Let's move on and talk about stocks. Of course, we have longs in Hindustan Copper, a strong up move, 10%. In fact, locked in at F&O circuit of 10% at the moment. We have seen advances for ICICI Prudential, SRF, as well as Ramco Cement, all of them looking at longs. Coforge looking at a very bit of marginal decline in underlying, so I wouldn't necessarily call it shorts. But as far as the other stocks in terms of unwinding is concerned, we're once again seeing a lot of short covering in your Adani Group company stocks like Adani Enterprises and Adani Ports. Tata Steel, MCX and Metropolis also doing well in today's day of trade. Overall, it's turning out to be a good start to the trading year.
Absolutely. Thank you for that, Agam. It is a good start and, pretty much most sectors are up in the green, but specifically, I would say, metals having a superb day. Hemang, Jani now joins us in the conversation, market expert. Hemang, great to have you on. We're just going through what could be the biggest factors and how sustainable is this sort of up move that we're seeing. Would you say that metals, especially copper, counters like Hindustan Copper, will be on your radar?
I think the overall market is showing a lot of resilience. Remember, on Thursday expiry day, we had a big spike and a little bit of cool off, but today it kind of opened gap up. And the good thing about the market is that the breadth of the market in terms of participation from the broader market is extremely good, and it is supported by reasonably good volumes. Now, coming to metals, I think given the positive data that we had from China about the economic expansion and the manufacturing PMI being better than the market expectations is helping the sentiment. And within the metal pack, we like three stocks. One is Jindal Steel and Power. The other one is Tata Steel. And the third one is Hindustan Copper. So we think that one can really participate in these three names for another maybe 7 to 10% kind of an upside.
All right, Hindustan Copper definitely on that list. Hemen, do you track Hindustan Copper? Would you still look at it at these levels?
Absolutely, Tamanna. In fact, Hindustan Copper is one of the stronger stocks in the metal sector. We are in a short-term, medium-term, long-term uptrend. We're currently at 307, Tamanna. For the long term, the stock is going to go to 500 plus. But even now, we've been in this range for what? For the past three months or so, Tamanna. Between 232 on the downside and 305 on the upside. And we are on the cusp. I'm saying cusp because this is not Friday. This is the first day of the week. It's a weekly pattern. But we are on the cusp of breaking out from here. I mean, this breakout looks like coming in. And once this breakout formally comes in, another 15% from here seems to be on the horizon, Tamanna.
Hemang, the point or the big cause of the rally in steel and copper stocks is a better than expected PMI in China and a China recovery story that is now beginning to pick up steam. I'm trying to understand what would be the other plays on that specific story apart from what we've seen today at JSW, although other reasons as well, Tata Steel, all of these players have been doing well. But where do you see that going?
Really, the steel and even copper, aluminum names are the ones which will have some sort of a positive rub-off of that data point. And in fact, given the fact that the Fed is going to be basically starting to cut down, and you're seeing the gold and silver trading at very high levels, there's a sense that the entire commodity space will continue to do well. So within the entire space, we like Coal India, which has been one of the best performing stocks. Apart from that, some of the ancillary power stocks. So, like say for example, Godavari Power, which is also into power, merchant power. I think these are some of the names which would benefit because of the better sentiment towards the commodity space.
Okay, so that's one view on some of the high-flying pockets. Now, we bring the focus back to autos. Remember, we started talking about autos and how some of the stocks have done. Now, let's talk about the fundamental reasons for some of these stocks to be active today, and that is the monthly sales numbers. So, 4 or 5 companies have come out with numbers thus far, the March auto sales, that is. Puneet, my colleague, joins in to break it down for us as to who's done well and who's not relative to estimates. Puneet, good afternoon.
Hi, Niraj. Good afternoon. And as you rightly said, post 2 o'clock, we've seen a lot of results for the monthly numbers come in. Let's start with Maruti now. We did flash numbers. Total sales are 1.87 lakh units, which is up roughly 10%. We're also seeing that it is just a tad below expectation of roughly 12% growth. For exports, the results are around roughly 14%, and it's versus expectation of roughly 10 to 11% by brokerages. Although there are a couple of mentions about Maruti that it has record highest ever domestic sales of roughly 17.9 lakhs, and on an overall basis, it has crossed 21 lakh sales in a financial year. And those numbers are reflecting in the stock price as well. Stock is up roughly 20% from January year to date. Moving on to Tata Motors, on an overall basis, the sales are up just 2% versus expectation of roughly 5%. The PV sales have been one of the key main drivers of sales, for roughly 50,000 sold in this month, which is up 14%, just a tad below the 16% expectation by brokerages. While the CV sales have not done well, they are down 10%. And here is the main thing, because the expectation was roughly 6 to 7%. So it has fallen a bit more than the expectations from certain analysts. Moving on to Eicher Motors, the Royal Enfield maker has reported sales of roughly 75,500. It is up roughly 4.6% versus expectations of roughly 7% growth. So that's a tad negative for that. While exports have been down roughly 23%, and this is also similar to Tata Motors CV also suffering. For VECV, which is the commercial vehicle arm of Eicher, this has been a positive surprise. VECV sales are down 5.6%, whereas brokerages estimated it to be down more than 9%. So that's one of the key triggers. Domestic CV sales down 6% versus expectation of roughly 12%. And although exports are very small, roughly 400 odd units of the total sold, they are up 11%, while brokerages has estimated a fall in this for roughly 2%. M&M we covered in the morning, but just quickly going through the numbers, total sales are up roughly 4%, and this is roughly 10% below the estimates from brokerages. Three-wheeler sales are the ones which are affected. It is down 7% versus a 7% growth estimated from brokerages. While tractor sales have been one of the key problems for the whole financial year for M&M as well as for Escorts. Tractor sales are down 26% on a month-on-month basis compared to last year as well, while the expectation were of a 16% fall. So that's also a key negative. And finally, finishing off with Escorts, tractor sales not doing very well. The total sales are down roughly 16%, which is flat in line with expectation. But domestic sales are down roughly 16%, while exports are down 24%, while on a very smaller base versus an expectation of roughly 14%. So in all, PV sales have done well for all automakers. We still await numbers from TVS and Bajaj to compare it with Eicher, but commercial vehicles and tractors have been key problems, while PV has done well. Back to you.
Okay, PV has done well and two-wheelers were supposed to do much better. Let's see how the eventual numbers shape up to be. Hemang, anything that stood out for you from these monthly auto sales numbers? Good afternoon, Niraj here.
Yeah, hi Niraj. So I would not be very comfortable playing auto names purely on the basis of monthly sales. But considering the possibility of a very attractive GST rate for hybrid vehicles and the quarterly numbers, I would be more comfortable buying into a Maruti. Also, some of the two-wheeler companies, particularly Bajaj Auto, Hero Motor, these two names, from a quarterly results perspective, we think that they are better placed. So if we see any small correction because of this monthly numbers not being so good, I would use that as a entry point for buying those names for quarterly results play.
What would be your key picks there, Hemang? The ones that you would buy for a quarterly result play?
So we like Maruti mainly because of the GST related benefit for the hybrid vehicles and quarterly numbers. Also, we like Hero Motors and Bajaj purely from a quarterly results perspective.
Hemen, anything you want to add? I know you said Maruti and the levels run up makes you a little uncomfortable right now. But any of the other players that you would look at?
Yes, I'd go for a contra buy call on exports Kubota, Tamanna, because hasn't done much. We've been down for almost 6 months. Downside limited, positive divergence seems to be turning. So I would tractors numbers haven't been exactly great, but I would say escorts is looking positively interesting, Tamanna.
It's interesting. If you look at the overview on the auto numbers, it's actually your two-wheelers are still trying to come up to pre-pandemic levels. And I think there's a larger story over there that we should look at about why just specific segments of passenger vehicles are also doing well. Your SUVs, your more premium cars or your more premium vehicles, which is the case on a lot of these players. So an interesting story there. But PNB Housing is another one that we have our eye on, isn't it, Niraj? What a stellar run-up.
Yeah, this is stuff that dreams are made of. 18% higher for PNB Housing Finance today. And two reasons. I mean, both reasons woven with each other. There is a Morgan Stanley note which has come out and said that because the credit ratings have been revised by CARE Ratings to AA plus stable from AA negative, both CARE and ICRA, to be honest, and therefore they see that as a constructive thing. But just the way PNB Housing did well, it started off 3.5% higher. It's ending the day 18% higher. It's just the kind of move that makes one stand up and take note.
That you dream about.
Yes, because
you dream about a stock price moving up 20% higher.
I dream about a stock price not starting off 20% higher and not giving chance to investors to get in.
Yeah.
It starts off 3% higher. People can analyze. People have the time. They can put in their money to work if they believe in that, and it trends higher and ends the day at the highest point of the day. It's such a beautiful chart.
Well, that is definitely a very specific dream, which PNB Housing is reading out today. But also, what I find interesting is that once again, slow and steady and quietly, how it's this particular brand and this company has built up its space on a day when, or at a time when others in the HFC space or your BFSI space are doing okay.
Yeah.
They've not lit it out all on fire. Quick word from Hemang on PNB Housing, if you're tracking it.
PNB Housing in particular we don't cover, but if you see last few days, there are certain initiating coverage reports on the housing finance names, and we think that this quarterly numbers are going to be quite good. Also, typically in an election year, people do expect that housing stocks will do well, and real estate anyways has been doing so well across, right? So I think within the universe, LIC housing is something that we like. Apart from that, Awas is something that we feel is extremely well placed. So some of these names I think it would be good to have in the portfolio.
Interesting point that you made there. Why do housing stocks do well or housing companies do well in an election year?
So typically there is a certain degree of excitement and expectation that you would see some positives in terms of either interest subvention, affordable housing related things. Once the government is announced, of course, this is a cool-off period, so you would not see any specific announcements as such. But people do have expectation that if, let's say, a certain government is formed, then probably you will see some, incentives relating to housing because that will become a big theme. Also, budget, as we all know, will be presented post the formation of the government, and typically people do have expectations around housing. So, which is why I think the sector remains in limelight.
PNB Housing anyway has its own story going on. Real estate overall has its own story going on. Quick word from Hemen on PNB Housing at these levels. If you have lived that dream that Niraj has so described in such lovely detail, would you now wake up and smell the coffee and make some of that money, exit at this point, or at least take some of those profits off the table?
Well, no compelling reason to do that, Tamanna, because highest single-day volume since 2nd January 2023, more than 90 lakh shares. We'd have to wait for the delivery marking to come through at the end of the day. So it is the highest volume in almost 1 year, 3 months. Something is cooking and something good seems to be cooking. So I'd wait. Okay, I don't think this will be followed up. Or I think it would be unreasonable to expect to see another such a move coming in next day. But everything seems to suggest that we were off from a 3-month decline. We've taken support at an important level. So I'd say wait. I'm not sure if buying fresh is a good idea, but if I have a position, I see no reason to sell. I believe this could be a potential turnaround. And if maybe I'm jumping the gun, but if I think what it is, I think this is probably the beginning of something more.
It's definitely the beginning of an exciting day or end of an exciting day. 20% up now on PNB Housing. I quickly just want to pull up the intraday chart for BEL. Their business updates have come in and they've registered the highest ever turnover of 19,700 crores in FY24. A few of those business updates have begun trickling in for the whole financial year, and I keep seeing this highest ever, largest ever. So yeah, maybe that's part of it. That's how you compose those drafts. But
and here's what will happen, Tamanna. We'll see a business update. Then we'll see an actual update. Between those, we'll see the analyst estimate for what will happen in the quarter and then the year ahead. And we'll all be scratching our heads as to how many times we'll be, in a month, we'll be talking about the same stock.
Well, BEL deserves at least a bit of a mention right now. Just let's look at that intraday chart and how that stock is doing. And not bad. That business update is helping it right now. Order book stands at 76,000 crore rupees. But there's another stock that we have in focus, and Madhu Kela has bought a stake in this NBFC stock. Harsh is here to tell us more.
Well, yes, Tamanna, it's a systematically important NBFC, basically assets under management over 500 crore. And we're going to talk about Indostar Capital today. Now, quickly taking it to the company itself, it's transitioned from a lender which was into corporate lending, incorporated in 2009. But outside of that, it's transitioned since 2018 from a corporate lender more towards a retail lender. And we'll see the book in just about a bit. There you go. 74% was corporate in FY18. Now just about 5% corporate, and they're selling down fast, especially in corporate. Also, they had a chunk in MSME. The MSME lending that they had, and as the book comes up on your screen, you'll notice even that has tapered. Currently has presence in 493 branches, has around 3,700 employees, and is shifting steadily towards retail, largely CV and housing. Now, you look at the book itself, SME currently at 9%. That is also starting to come off. They were doing SME lending of over 1 crore, which now it seems they're not liking as much, so they're running this portfolio down as well. What they're moving more towards is the smaller SME lending, something in the ticket size of 15 lakhs, which is quite small in comparison to what they were doing earlier, less chunky and therefore less risky to a certain extent. What they've done with regard to NII, therefore, it seems like a turnaround story. NII is actually coming off before it hopefully goes back up. That's the current trend in NII. If we look at operating profit as well, very similar trend, but when you look at profit after tax, you'll see a slightly different trend, and we'll come to the reason why. Your PAT seems to have gotten better FY22 versus FY23, and 9-month FY24 also not looking as bad. It's a profitable NBFC now. It's also because of credit costs. Credit costs have come off quite sharply. At 1,000 crore plus is that credit cost number in FY22, which was hurting PAT. Now credit costs has gone into the negative zone, and they have SRs on their book as well, which they are liquidating. SRs are largely assets which are sold to other lenders, and now recoveries for that is starting to trickle through. Look at the asset quality, and that will suggest 9% to now 6.5% in the last 12 months is how GNPAs have progressed. NNPAs to very similar trajectory. 4% plus was the NNPA number last year, currently sitting at 2.8%. So your asset quality is getting better, and which is why there's possibly some interest in this. Let's also quickly flip it around, look at the kind of opportunity lying ahead. Their housing finance book is growing at 25%. Capital adequacy is very solid currently at 30%. Net worth of roughly 3,200 odd crore on a book size of around 8,000 crore, which is very, very safe. So your debt to equity is quite low at the moment. There is scope for further expansion of this, and therefore ROEs will improve if this were to happen as your debt to equity starts to go up. This is how it's currently valued, around 0.8 to 0.9 times price to book, which is reasonable, which is possibly why there is so much interest in this one. Let's look at shareholders very quickly. We already have something like a Brookfield, which owns around a 50+% stake in the company, but you have Madhukela, who already owns roughly 3.5%, increased his stake by another 0.5% or so. So he's inching his stake up, it seems. But let's look at some of the other shareholders. We spoke of Brookfield, 56% holding, and they're going to buy another 450 crore through warrants as well. So there's a fresh infusion which is to happen at 184 rupees a share. That's the key. And now Madhukela has again bought around 7.6 lakh shares, roughly 0.5, 0.6% of capital at 186 rupees per share.
Well, Harsh, that's detailed work. Thanks for doing that. And Indostar Capital is certainly in focus today, not as strong as PNB Housing, but can't be because it's got a 5% upper circuit, of course. Hemang, do you track this one fundamentally?
This company used to have its own sort of issues, and there was a sense that maybe the fresh capital infusion will bring certain amount of stability, but I tend to avoid the smaller NBFCs where the historical track record has not been that great. I think that there are plenty of decent opportunities in the NBFC space itself if one wants to really look at it.
5% higher though. The volumes are not as thick as you can see. It's about, on the NSE, it's about 27 or 28,000, 29,000 shares traded. So the volume's not necessarily the highest, but must say, the total number of buyers on the BSE alone seem to suggest that the circuit limits or this momentum might last for the stock tomorrow as well. But it's 5 minutes left for close. Hemen, if we had to ask you for the one top BTST, I'm presuming it will be a BTST, not STBT, which would that stock be?
Yes, Niraj, BTST on UPL.
United Phosphorus.
Yeah, it's 466. One can buy at 466, stop loss for 61, target 476, the risk reward ratio 1:2.
Okay, so that's the disclosure. And Hemen, just one quick word. You were consistently very bullish on Adani Enterprises. It's after a while that we're seeing, the whole group has done well, but Enterprises has also moved up a little bit. Is it a good time to buy this stock afresh, or would you look at other names?
I think it's a chance to buy Niraj. Frankly speaking, it's flummoxing that it hasn't moved. There is nothing wrong with the stock. It looks good. And I mean, look at Adani Port, look at Adani Power. I mean, many of the Adani Group stocks have done well. Why won't Adani Enterprise? I think it's just a matter of time. But when it plays catch up, and this catch up will happen on a close above Niraj, the level is 3350. We are at currently 3249. We are 100 points away. A weekly close above 3350. This last happened in January 23 when it was above this. So when we take out 3350, we will go to 3600 and 3885. So I think there's not much to lose. I would buy at these levels.
Okay. All right. Yeah. So just one last take on a Torrent Power, if you have been tracking it, because that's one stock that we didn't talk about today and has had a good day throughout. Hemen, just a quick take from you.
That's for me, right?
Hemen Kapadia.
Okay.
It's a 1.5 year up move, Tamanna. Short term, medium to long term, uptrend on all counts. Looks good. Fresh buy? Don't think so. Hold strong.
Ma'am, what about you?
No, I think the reason why you're seeing such a strong action in Torrent Power is because of the high probability of inclusion in MSCI. Also, it's a relatively illiquid stock. So when you see good amount of buy flows because of the possibility of inclusion in MSCI, you tend to see bigger price action. Also, you can see that typically some of the power names are in action, be it Adani Power and whole host of names. Tata Power also has been doing relatively well. So that theme is something that people have been liking. But the reason is because of the MSCI inclusion power.
Hemang and Hemen, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time. Just keep in mind, the other aspect is that the kind of power wins or order wins that Torrent Power is bagging these days is something that it's an addition to the equity it did have. And I think that is the other reason why the market seems to be rewarding it quite graciously every time it has won these orders. So if you look at the YTD chart of Torrent Power, it'll show you a story which is quite stunning. Amongst all the power names, Torrent is probably the one that has gained the most YTD. So bear that in mind. 52% YTD. It's been a really strong move. Okay, now let's get quickly the heat map up on the screen for the Nifty 50, because we've done well today, you have to admit, despite the fact that we're still ending about 0.6% higher, so not at the lowest point of the day. And while there are losers, specific losers, iShares, weak data, Titan correcting a little bit, FMCG pulling back a little bit despite the fact that they did well on Thursday, I think there is enough winners out there to end the day on a good note. One of the probable reasons why divvies would be up about 3.5-4% is because of the Suven Pharma commentary around CDMO and what could come out for CDMO players over the course of the next couple of quarters. So, which is why I think the likes of divvies, Lotus, etc. have done well. But the showstoppers, metals, in terms of percentage gains, HDFC and some of the others have done exceptionally well. But Tamanna, I have to cede it to you that the broader end of the spectrum has done much better than the large cap. So in some sense,
absolutely,
that takes the cake.
You know, the whole story about how this will be the year of the large caps and mid cap and small cap, despite everything that happened from SEBI, mutual funds, etc., they have bounced back and bounced back well. Look at the small cap index, up about 3% there at close. We should quickly also pull up the sectoral indices to give you an idea of where really the boost is coming from, and completely media, reality. Those are the counters which are doing very well. But in terms of weightage and actual heft, I think metals and public sector enterprises would be more on that end. Some sparklers today that we've been talking about since morning, PNB Housing, one of them, and definitely an exciting story. I want to see if it ended 20% up. Yeah, it has. That MS note, its credit rating going up, and like our experts also said, this might be the start of something bigger, a bigger turnaround story, which it would be interesting if investors would catch it at the right time.
Yeah, that and lots of others. Of course, the markets have shut, the broader end of the spectrum doing much better. Yeah. And we'll carry forward, I think, this note tomorrow on India Market Open. We'll try and talk about some of the winners for today. But For now, from Tamanna and me and the team that put this show together, thanks so much for tuning in.